Peter, I'd like to move on now and talk about this peculiar paradox we're seeing in the money supply. The MZM, M3 figures continue to plunge at an alarming rate. Some see this as deflationary, at least in the near term. Clearly banks, lenders, they're nervous, they're holding on to record reserve levels, hesitant to lend. Do you see this theme persisting, and what will be the geoeconomic ramifications?
Well, the government's not even reporting M3, so I'm not sure.
Shadow stats M3.
But money supply is shrinking now. You're talking about short-term movements.
This is the annual rate of change. It's the one that most economists are watching.
But the annual rate of change is now declining compared to what it was 6 months or a year ago.
Exactly.
Yeah, so I don't think that's going to continue because I think the government is going to continue increasing money supply. Look at the deficits that they have to monetize. Look at what's going on. They're going to keep creating money. They're lending to the government. They're lending. The government is borrowing a tremendous amount of money. The budget deficit is $1.5 trillion, and of course, every year, trillions of dollars of government debt matures. And as it matures, if the current holders don't want it, then the banks or somebody has to pick up the slack. So that is where all the money is going. I think the money is going to the government that might otherwise have been loaned out to businesses. But banks are still lending. They're not. The money isn't sitting there, in a vault.
Let's move on to geopolitical concerns. The sovereign debt troubles in Greece, Portugal, Spain. Clearly, the euro has been under some pressure. In fact, gold has broken out really in euro terms. Gold remains a bit range bound. Do you expect gold to reach new highs in the next couple of months?
Oh, absolutely. Whether it does in the next couple of months or not, it's always hard to time the market. But I think gold looks like it wants to move a lot higher, and I expect it to. It's been very strong recently in other currencies. It's made new highs in terms of British pounds. It's made new highs in the euro. So I think new highs in the dollar are not too far off, given all the inflation that's being created and, given the fact that creditors are starting to pay attention to sovereign credit and the risks of default or inflation. You're seeing that now with Greece and what's happening with the euro as a result of the Greek situation, worries about other countries in Europe that have a lot of debt, whether it's Portugal, Spain, Ireland, or maybe Italy. And then, you look at the worries about the UK. All of a sudden, the pound's been under a lot of pressure. They've got a lot of debt. People are worrying. It's not going to be long before, they start worrying about the United States. Because we are the biggest offenders here, and as far as, we've raised deficit spending to an entirely new stratosphere.
Many pundits have been bearish on stocks commodities over the past year or so, but markets seem to be able to remain irrational longer than shorts can stay solvent. What is your position on the major investment asset classes such as stocks, commodities?
I've been long, stocks for 10 years, and that was a problem in 2008. Of course, stocks went down around the world, but 2009 was a fantastic year to be long stocks, particularly foreign stocks, emerging markets, commodities. And my inclination is that is going to be the long-term trend. Certainly stocks are going to have periods of time where they're falling in terms of currencies, but in general, if you buy good companies and good businesses, there is real value there. Businesses are producing products, they are earning revenues, they own real tangible assets, whether it's property, equipment, so there's something real there, as opposed to paper, which is nothing, right? It's not backed by gold anymore, the dollar or the euro or the yen, they're just pieces of paper, and governments create them. If you don't want to be in assets, then the alternative is to be in paper. And I just think over time, paper is going to lose a lot of value, especially since they're creating so much of it, and that it intrinsically has no value. So, I like owning stocks rather than cash or bonds. Now, you can say, well, what about gold? Does it make sense to own gold or stocks? And my answer has been to own both. I don't know for sure whether having gold is going to be better than having a portfolio of stocks over the next 10 years. It could be that gold does better than even Chinese stocks. But I have a feeling that over the long run, you make more money owning productive assets that are growing in value than simply owning metal, a piece of gold that just sits there. That if I can own a business in a country like China that is really growing rapidly and investing and the population is getting wealthier, that all the value added by the entrepreneurs in that growing business and the dividends that I'm earning on those stocks, that over the long run, that's a better way to accumulate real wealth than simply, holding gold to try to preserve your wealth.
But I'm sure you'd agree, though, that precious metals are the best insurance policy.
I recommend that everybody owns precious metals. I don't think it makes sense to not own precious metals. It just depends on the person. I mean, I think I still have close to 50% or maybe more than 50%. I don't, keep evaluating it, of my own net worth in gold mining stocks and precious metals. The rest of it is mainly in stocks that are not gold, not mining stocks. I mean, I don't have that much in the way of cash. I keep some cash lying around. But people have to make decisions on their own, what percentage they want to hold. I mean, whether it's, 10% gold, 50% gold, 100%, people have to decide what asset risks they're comfortable with. How much risk can they tolerate? Certainly having stocks in 2008, a lot of people might not have had the stomach for it. I mean, especially if you had all stocks. I mean, if you only had a small percentage of stocks, it probably wasn't that big a deal to watch your portfolio go down 50%. But, people who are very confident in the long term, I mean, I saw a lot of my stocks get clobbered in 2008, including my gold stocks. Got hammered as gold stocks in 3 months in 2008. The gold index was down 70%. Yeah, and of course it's recouped almost all those losses in 2009. But a lot of people got scared when they saw those losses. People who are waiting for rebounds in some of these internet stocks, right? They've been waiting 10 years and they're still, they're never going to rebound. There's nothing to rebound.